Hello, and thank you for joining our second College of Business Plan Giving webinar hosted by both the University of Nebraska Foundation and the College of Business. My name is Corey Loper, Director of Development for the College of Business. As I said, I'm joined by Kathy Farrell, Dean of the College of Business, as well as my colleagues, Emily Solsley, Matt Honke, and Mackenzie Puckett. We're thrilled you decided to join us today to reflect on your own legacy and learn how estate planning, specifically wills and trusts, can play a role in yours. My colleague Matt Honke is going to be doing the chat function for us, so please put questions or comments in there and he will ensure that we address them during or after our webinar. There will also be a survey sent out, which is very helpful for us, so please take a minute to do that and share your feedback so we can make sure we're continuing to provide information and tools for you. I get the pleasure of introducing the Dean of the College of Business. We are humbled to have Kathy joining us here today in this conversation. Kathy Farrell became the James Jr. and Susan Stewart Endowed Dean of the University of Lincoln College of Business in December of 2017 after serving nearly a year as interim dean. She led an extensive planning process that resulted in a new mission, guiding principles, and initiatives to advance the college. Under her leadership, the college has launched a business analytics major, a business and law major, the Seacrest Teaching Fellows Program, the Integrity in Business Leadership Program, and several new online graduate and professional development programs. She has also been instrumental in increasing donor support, has doubled faculty support, expanded student support and programs, and enhanced scholarships and retention-focused initiatives. Kathy was elected to the Association to Advance Collegiate Schools of Business, the AACSB, Board of Directors in 2023. She serves on the Board of Directors of Lincoln-based organizations Nelnet, Assurity, Bryan Health, and Lincoln Community Foundation, among other nonprofit boards. Kathy joined the College of Business faculty in 1993 and taught corporate finance and banking for more than 20 years. She earned her PhD in finance from the University of Georgia and received her bachelor's degree from Kent State University in Ohio. Kathy, again, thank you so much for being with us here today.
Thanks so much, Corey. Hello and welcome, everyone. As Corey said, I'm Kathy Farrell, Dean of the College of Business. And it's an absolute pleasure to be with you today as we explore a topic that is often deeply meaningful to many of our alumni, and that's planned giving. Thank you for joining us today for this educational conversation. At Nebraska Business, we believe in building a legacy, not just through the students we educate or the research we produce, but through the enduring impact of philanthropy. Planned gifts are a powerful way to ensure that your values and vision live on, supporting future generations of leaders, innovators, and change makers. We're proud to share that during the Only in Nebraska campaign, our alumni and friends have stepped forward in remarkable ways. To date, we've secured more than $35 million in planned gifts for the College of Business. Even more inspiring, we've also received $2 million that has been realized this year from previously documented planned gifts, transforming lives and advancing our mission in real time. Today's webinar, facilitated by our wonderful and new foundation colleague, Emily Solsley, is not just about our college, it's about you. Whether you choose to support Nebraska Business or another cause close to your heart, planned giving offers a unique opportunity to create a legacy that reflects your values and priorities. We're here to help you understand how and why it matters. We're especially honored to welcome Bobby Christensen, a generous donor and passionate advocate for planned giving. Bobby has graciously volunteered to share her personal why with us today, and I hope her story will resonate with many of you. Thank you again for joining us today. Your interest, generosity, and commitment to making a difference are what make Nebraska Business truly exceptional. Thank you and enjoy the conversation.
Well, good morning, everyone. My name is Emily Solsley, and I am a director of gift planning here at the University of Nebraska Foundation. And I am grateful for the opportunity to partner with Kathy Farrell and the entire College of Business development team. And I'm here today not to give legal advice, but hopefully to provide a space for thought and questions. Even the stupid questions are welcome here. But before we even get into the actual topic of wills and trusts, I do want to talk about why legacy planning even matters at all. So, when we talk about legacy, we're really talking about alignment. The slide up on the screen here, it shows past, present, and future because that's how most people naturally think about their lives, where they came from, where they are now, and what they hope continues after them. Legacy planning, then, it's not actually about money or assets. It's about values, it's about family and loved ones, and it's about building a legacy, long term impact. Many people intend to plan, they know they should, they want to, but life is busy and planning often gets delayed. So, before we talk about any of the tools or options, we're going to talk about what we often hear from donors and where people get held up. Maybe you identify with some of this, or maybe you don't. And if so, that's great. Or if not, that's great. Trying to get to that next slide. Thanks all for your patience. Okay, so I talked to a lot of people about their experiences in dealing with estates. Obviously, it's the estates of their loved ones. And what I hear more often than I would like to share is we thought we had more time. So when people share their stories with me, it usually falls into one of two categories. Either they're deeply grateful for the good planning their parents or their spouses put into place, or they're very determined not to leave the messy hand that they themselves were dealt. Planning ahead then is really an act of care for the people that you love, the people who will be left when you're no longer there to help. It's not actually about anticipating the worst, it's about reducing stress and uncertainty, especially because a lot of these plans will come into place in already difficult moments. I also want to make it very clear that estate planning is not only for the wealthy and is not only for people who are retired. Estate planning is relevant across life stages. So I could talk on and on about how important I think estate planning is, but I'm going to go ahead and pass the screen, pass the mic over to Corey again, who's going to share a little bit and introduce our donor testimonial, Bobby Christensen.
Bobby Christensen is a donor that I work with that decided she wanted to start working on a planned gift. And when we started
So when we
discussing,
first started
it really came up as the timing, and for her, why now? She had two girls at the university and wanted to start that process of a planned gift. And the timing of it really worked out well. And she decided to sit down with
talking
me,
about
do
the
a little
idea.
bit of an interview, and
So
explain to all of you her why and her why now.
when we first started talking about the idea of a planned gift, I know a couple things really came up to you as the right timing. Can you share a little bit about why the timing and your reason for doing your planned gift?
Yes. So both my husband and my father passed away within the last 6 years. And when my father passed, he was quite elderly, but he had perfectly organized and created a very clear and clean setup for me. So I knew exactly what his wishes were. I knew where all of his paperwork and documentation was. And his death was still sudden, even though even though he was quite elderly. And because of that, um, it was because he had made everything so easy for us in the midst of our grief and in the midst of all of the other things that we had to do. The one thing that we didn't have to worry about is finding all of his paper, making sure his wishes were honored. And I really appreciated the thoughtfulness that he had put into that process. It made everything a lot easier for us.
Wonderful. Thank you for sharing. And I know for you, having the girls at the university kind of brought up some feelings for you of remembering your time at the university and kind of reminding you of this is part of the reason you wanted to do your gift to the university.
Yes, so I was a first generation student at the University of Nebraska, and again was in the College of Business. And those were honestly the best 4 years of my life. I loved my time there, and they were the perfect springboard in terms of community, giving me the education and the connections that I needed to start my career path. And so it was great when both of my daughters decided to go there as well. And the university has been really great to them in terms of promoting their interests, giving them a great education, and then moving them on to the next phases of their life as well. So I have a lot of sentimental attachment to the university, and I'm just really thrilled that my daughters got to have the same experience that I did.
Wonderful. And I know you seeing it as a mom, seeing the education and remembering your time kind of made you say, you know what, now is the time.
Yes.
And for all the reasons that you said. And then do you want to share a little bit too, as an attorney, how you would recommend and you know, any more reasons of the why?
Yes. Well, I'll recommend as an attorney, but also as a spouse. My husband passed away 2 years ago, and we had just recently done our estate plan. And so again, everything was documented, everything was in order. We always think that we have more time. And sometimes we put off doing the estate planning because we don't like to think about our deaths. But as painful as the process may be for us, if we don't do this planning ahead of time, it's doubly painful for the loved ones that we leave behind if our affairs are not in order. So I very much recommend, even, it doesn't matter whether you're in your 20s, 30s, 40s, 70s, taking the time, making sure that your wishes are thought out, and making sure that the institutions and the organizations that you cared about receive those generous gifts when you think that it's appropriate to do so.
And then last question for you, if you could share as far as the actual experience of doing the documentation and the process of doing that, anything that you would share about that with the viewers?
Yes. So the university, I have made a gift to the university in my will, and there are all sorts of ways to make gifts. You can do it in a will, you can do a current gift, you can do some sort of annuity. There are many, many ways to give. But the important thing is to make sure that it's appropriately documented, legally binding. The university also very helpfully provides a form that you can fill out so that they're not surprised by what happens. And I've worked with enough organizations to know that a lot of times an organization doesn't even know. They can't plan because there's been no notice that it's coming. Then they get this bequest, which is wonderful. But then they have to figure out what to do with it and how it fits. And sometimes there's disputes. It'll be much easier, again, for the heirs and for the institutions that you wish to benefit if you make your wishes really clear ahead of time.
Yep, you're so right. And we so appreciate knowing ahead of time and being able to fulfill your wishes and the donors' wishes for their future gifts as well.
Yes.
Well, thank you so much for sharing with us. We appreciate you sharing your story and for you making your gift.
Thank you. You're welcome.
Thanks, Bobby.
So I'll come back to that poignant quote that Bobby shared. We always think that we have more time, but if we don't do this planning ahead of time, it's doubly painful for the ones that we leave behind. So, what I appreciate most about Bobby's perspective is that estate planning was not driven by fear. It was driven by clarity and values. She wanted things to be simpler for her loved ones and meaningful beyond her lifetime. And her story shows us why this conversation matters. Now let's talk about how to begin in a practical, approachable way. This is the basics where we really get started in estate planning. So every estate plan starts with a foundation. For most people, that foundation includes a will, and in some cases, a trust. And a will and a trust, again, has nothing to do with wealth or complexity. They're just tools to help ensure that your intentions are clear. It doesn't need to be complicated. The goal is clarity, clarity for you and clarity for the people who will be carrying out your wishes. Um, there's a stat when it comes to the estate plans that are never actually finalized and signed. Of the people who meet with an attorney but never return to sign on the dotted line, the majority of those people, like a 90% majority, haven't finalized their plans because they don't understand it. So I want you to know that here on the gift planning team, we're always happy to serve as a sounding board and give you the right questions to bring to your professional advisors. Again, whether or not that gift is going to come to the foundation or it's just a question. But you're also encouraged to make sure that you do understand the ins and outs of that thick stack of documents that is your estate plan. And hopefully today helps you a little bit understand the ins and outs, or at least gets you started. So we're going to go into what a will does. At a very basic level, a will does a few very important things. It states who should receive your property. It names an executor, who's the person who's going to carry out your wishes. And if you have minor children, it allows you to name guardians. A will applies to nearly everyone. And here's a key statement. If you don't have a will, you still do have an estate plan. And if you have that default estate plan, the decisions are made by state law as opposed to made by you. And for a lot of people, that realization is what's helped them go, oh, time to get started on my will. So a will is a legal binding document that you work with an attorney to put into place. Some people also use a trust. And a trust is a little bit different. A trust can help avoid probate. So if you have a will, that will is going to go through the court process, which is called probate. So if you can avoid probate, you have a little more privacy, and you may simplify administration for loved ones. And that can be really helpful during the emotional time of loss. Trusts aren't required by everyone, but they are helpful to many people. And so key takeaway today is a trust is just a tool. When used intentionally and kept up to date, they support your goals. All right, so we've not gone too deep into stuff, but we have talked a lot about the most important things, which is the fact that wills and trusts exist and that you need a will. Right now, we'd like to pause for some questions. And Matt, I don't know if you have anything that came in advance or anything that's in the chat, but feel free to take some time. If you do ask something that we are going to touch on later on, I'll just let you know that. But if you have any questions at this point or any questions as we go throughout the presentation, please throw them in the chat.
Yeah, hi, Emily. I have a question that came in prior to this from someone who couldn't attend live. They had questions about tax advantages of an IRA versus bequest.
That's a good question. Okay, so a bequest is a statement in your will that determines who's going to receive something from your will. When we talk about bequests here at the foundation, we're typically talking about charitable bequests or a gift from your will to a nonprofit organization. So a lot of people hold the majority of their wealth in their tax deferred or tax advantageous retirement plans. And there are reasons to look at the whole picture of where your assets lie to ensure that you're choosing the right assets to go to the right recipients. So if you have a bequest in your will, but you're taking your IRA assets into your will, you're kind of exposing some of those assets to potential tax implications. Additionally, if you're looking at like, oh, I have um, I have 3 kids and I have one cause that's dear to my heart. Should I give my kids assets from my IRA or should I give them a gift of property in my will? And in that case, I'd encourage you to talk to your advisors to find out what the best fit is for you. But typically, if someone's got funds in an IRA, it's an expensive inheritance to give to kids because they have to pay income taxes on what they receive from an IRA, and they have to take out the entire balance of the IRA within 10 years of your passing. And so they're often receiving that in their highest income earning years, which can increase the tax burden on them. Whereas if you're giving funds from your IRA to a nonprofit, we don't have to pay income taxes. And that can help just create a little more space in your estate plan to make a larger charitable gift. I'll also say, if you leave a bequest, but you have the beneficiaries on your IRA set to something besides your estate plan, besides your will or trust, then any of the funds that you are thinking about in your IRA may not be going to your will, which might not leave much left for a bequest. So you want to work with all of your advisors, your team of advisors, to ensure that all of your assets work together in your estate plan so that your will knows where your retirement funds are going. And so that your trust, if you're using one, has the right assets in your trust as well. Long answer to a short question. The answer was yes.
Here we have Mackenzie here. Should I do a bequest or beneficiary designation?
That depends on what you really want to do. I often sit down with people to kind of look through or bounce questions back and forth on their entire range of assets to maybe think about what works best. And again, that's a question to have with your team, whether that's with a director of gift planning at the table or just with your attorney, financial planner, accountant, all that jazz. There's tax-wise reasons to give a beneficiary designation over a will. But there are also personal, psychological, family reasons to give certain property to certain places. So kids, for example, if they inherit appreciated assets like stocks or real estate, will receive a step up in basis on that appreciated property. And that's tax advantageous for them because it reduces capital gains. But if you feel like bucketing assets in a certain way that feels better to you, for example, if you have a life insurance policy set up that you no longer need the benefits from, and you want to take part of that for your charitable gift so that you can give more of your earned wealth to your family as a legacy, then that makes sense as well. So we can sit down and look at everything, and we can figure out what questions need to be answered between you and your professional advisors to determine if you should do a bequest or a beneficiary designation.
I have another question here, and Kathy, this can also go to you as well within the college, but I think both you and Emily here. Some people, obviously, they're going to give through their planned gift to a specific fund that they've already set up. But if they're giving, generally speaking, to the college, What's the best way to give to the college when I give through my estate that gives flexibility to support for what the college will look like in 10 and 20 and 30 years from now when those gifts would be realized?
Almost forgot the microphone again. Um, so typically what can be really valuable, of course, is unrestricted funds or discretionary funds, I should say, in terms of creating the opportunity to support the college wherever the greatest need may be. That said, there may also be an area in which you're passionate about, and it makes sense to tie your philanthropy to your passion. But there's ways you can do that too that still create some flexibility for the college or the specific unit in which you want to support. So whether that may be scholarship funding, for example, but writing the scholarship support in a way that still gives us some discretion so that we can meet the need based on also other giving that we've received, other philanthropic dollars, can be really valuable. So flexibility can be important, but we also tend to write, and Emily can speak more to this. We also tend to write fund agreements in such a way that it gives us some flexibility in case you want to support a program that at some point goes away, that we will take that into consideration and try to align it with something that would be consistent with the type of support that you were interested in providing. Emily, I don't know if you want to speak to that a little bit more.
Yes, this is exactly where we like to have conversations. And I would say that this goes even beyond gifts or philanthropy to your whole conversation with individuals or organizations that you're supporting in your will is things change over time. And we really want to have a relationship with you and understand the impact you want to make so that we can ensure we know how best to implement your plans. Same thing goes with your kids or your family too, right? You want people to be on the same page as much as possible to ensure that your wishes can be put into place the way you intend. But like Kathy was talking about, we also need to reflect that things change over time. And I'll share an example of a gift that happened to a different nonprofit here in Nebraska, but someone established an endowed fund to provide technology for a school system. And they could have established that endowed fund to provide specific tools and equipment, but this was back in the late 90s. So technology has changed just a little bit since then. And because the restrictions were kept fairly broad, those funds have been able to be used over time for things like one-to-one devices for every student in the district, which was really helpful during COVID. But there's just so many things that you can do when you create what we call preferences. So you know what you really want to have happen, but then also separate those from requirements. So that stuff all changes over time. And that often happens on the relationship side at the nonprofit or here at the foundation, because we can do that paperwork for free without you having to bill your attorney or pay your attorney their 15-minute billable hours. And so we can put a more general bequest or language into your will to ensure that it gets to the right place. And then we can keep updating or provide the fund agreement here at the foundation to ensure that the impact you want to make is built and also updated over time. All right, that was a lot of questions. We better hop back into the presentation. And feel free to add questions at any time. So we're going back a little bit into the general estate planning. And what we're talking about here is the gaps we see. These gaps are incredibly common, even among thoughtful and organized people. I even like to joke that the cobbler's children have no shoes. So I know attorneys who don't have their own will done. I'm not calling anybody out. More than 50% of Americans do not have a will at all. So if you're one of those individuals who doesn't have it done yet, that's okay. You're not alone. The other thing we often see is outdated documents. People who haven't updated their will since they put that first one in place in 1997. And not only are their kids grown and they've moved 2 times, but they have grandkids and their kids are neurosurgeons and don't need any inheritances. So they need to figure out some both tax planning and generationally relevant updates to their estate plans. We also see beneficiary designations, like we talked about on retirement plans, that don't match wills or that haven't been updated through divorces or deaths of other recipients. And we see trusts that were established but never properly funded. And we also see tax law changes. So we had tax law changes in 2016, 2020, 2023, 2026. There's a lot that's gone on that really impacts how plans need to be updated and changed. So a will isn't something you do once and let it go. It's something you revisit regularly. And all of these issues are completely normal and they're fixable once you take time to review your plan. Moving on, getting started does not have to be complicated. So I am going to drop a link in the chat. One of the biggest barriers to getting your estate plan put into place or updated is not knowing where to start. And the last thing a lot of us want to do is start by going and sitting with an attorney. We kind of want to know what we're going to talk about before we go there. So there are a ton of different ways to get started. Most people work directly with an attorney, and that is fantastic. Especially here in Nebraska, we have wonderful estate planning attorneys. Other people begin with free online will creation tools as a way to put their intentions on paper. So you can look up some of those free online will creation tools. They do a fine job for simple estates. If you have any questions about complexity, though, I would encourage you to visit with an estate planning attorney to ensure that all of your needs are met in your plan. We also offer a free online toolkit through our gift planning website. That's the link I dropped into the chat. And that's a way to help you organize information and think through decisions and even find out what the decisions are that you need to make. What matters most is actually momentum. You just got to get started, and that's more important than getting everything perfect. So that's the basics on a will and a trust. If you put questions in the chat with more specific questions about wills and trusts, I'm happy to give you the answer as general information or to help point you in the direction of the resources that you need for your specific plan. One thing we do want to talk about is charitable estate planning. And it's when people include philanthropy in their plans, the motivation for giving often comes from one of these 3 reasons up on the screen. I give because I received. I give because the mission matters to me. And I give because I was asked. There's really no right reason for people to give. What matters most is that the giving reflects your values, your story, and the legacy that you want to build. One other thing that we often talk about is the tax advantages of giving. Most of us are not impacted by the federal estate tax. The exemption limit is quite high and made permanent. So like 15 million for an individual almost 30 million for a couple if they've filed jointly. So there are plenty of tax advantages aside from estate taxes that come into play when it comes to charitable giving or making a future gift in your will or trust. And that often has to do with income tax planning. So typically, first, we talk about these 3 reasons up on the screen, why people are interested in giving back, what would be a meaningful legacy for them to build. And then we look at assets to figure out the most tax-wise way to do something meaningful to them. Now, here is our will language for someone who intends to make a future gift in their will to the University of Nebraska at the College of Business through the foundation. We are so happy to help people to give you the appropriate will language to place in your will or trust to make sure that the gift that you'd like to make is properly documented. I would encourage you, if you're working with other nonprofits, to find out the best way to document those gifts as well. For instance, sometimes there could be a nonprofit in California and a nonprofit in Florida who both have the same name. And so if you put in the name of the nonprofit, but not the tax ID number or address or the purpose, the executor of your estate is going to have difficulty making sure that gift gets to the right place. Additionally, if you direct something to the university instead of to the foundation, well, we all do our best to steward funds in the absolute best way possible. It can delay the function of your gift while we do the legal paperwork to ensure that the funds get where you intended them to be. And then the other thing too is if you put a general bequest in your will, but don't have any information shared with the foundation or the nonprofit about how that gift should be designated. And we talked a little bit about this earlier with fund agreements. In that case, it can be difficult for us to know, and we wouldn't be able to ask you the question how you want that gift to be used. So I have one donor that I'm very close with, and I was teasing her a little bit because her gift just says to the University of Nebraska Foundation. And I said, that's great. I know you want it to go to UNO, but right now it could go to Keep the Lights On. And well, that's not what we would do with your bequest. We do want to know exactly how you want it to be used. And when it does come to some of the smaller nonprofits, those general bequests really can keep the lights on. And that is a powerful part of what they need to achieve their mission. But if you intend for a gift to feed animals, but you leave a general bequest without any information about, oh, this is supposed to feed animals, they may make their best decision to have that gift go to their general fund instead. So conversations matter, correct documentation matters. We're happy to get you the best documentation we can to share with your advisor team. Now, I know we're talking about wills and trusts, but I do also want to bring up this slide because these things, while they are separate tools, they work in conjunction with your wills, with your trusts to create the biggest impact that you want to make. So like we talked about before, you might have a beneficiary designation on a retirement plan, on a life insurance policy, and that is where you're going to direct funds to any recipients from your estate, whether that's your children, your cousins or neighbors, or nonprofits dear to your heart. Dean Farrell also mentioned, oh no, it was Bobby Christensen, also mentioned earlier, charitable gift annuities. So you could fund a charitable gift annuity or a charitable remainder trust, which both provide lifetime income. And you could do that as income to for yourself or your spouse during your lifetime. Or you could leave a bequest to establish a gift annuity or a remainder trust for the benefit of a loved one at the end of your life. So you could leave a bequest in your will. It could set up the trust. That trust could provide income to your kids or your spouse for their lifetime or a period of years. And then at the end of that time period, then the remainder comes to the fund or the cause that you intend for it to go to. And then finally, real estate and appreciated stock, those appreciated assets, they're often not liquid during lifetime, and that makes them good assets to consider establishing gifts or using as inheritances at the end of your life, but also can be used during your lifetime in specific ways that we'd have to have conversations about to make a big impact through an outright gift or to establish a trust or gift annuity. So lots of just seed planting for you to think about ways to make a big impact that are smart for you and your family. Going back into establishing and or updating your estate plans. And if you attended our first College of Business webinar, you might recognize this slide. Estate planning is not a one-time event, and major life moments often prompt a review. So when you get married, when you buy a home, when you have children, if you get divorced and or remarried, retirement, loss of a parent, and maybe inheritance at that point in time. So your plans have to evolve over your lifetime, and updating those documents is a sign of good planning, not of something that you've done wrong before. So it's normal to need to update your plan. I did share this. This is the estate planning toolkit. I shared this as the link in the chat. Again, this is a really great starting point. It's free and easy to use. It helps you organize your information, to think through decisions, and to prepare for conversations with your family or advisors. And I want to be really clear, this toolkit is meant to be helpful whether or not you choose to include the University of Nebraska Foundation in your plans. This is a resource. And I will say that I took advantage of the toolkit. I filled it out. And then the last time I went to do my will, because I had everything in place, everything listed out, and was able to answer my attorney's questions very easily, we were in and out with a solid plan, and I paid so much less than I would have anticipated. So I'm not guaranteeing that that'll happen for you, but I would love for that to happen for you. All right, so here we're just going to talk about what next steps might be right for you. The first is I would love for you to just take one small step. You might review or create your will, no shame. You might check your beneficiary designations. Do you still have your parents listed? Have you rolled all of your retirement accounts into one place? Or do you have like random retirement accounts somewhere with an old employer that you've never moved over somewhere? Do you still have your ex-spouse listed? There's so many things to think about. The third is to talk with your advisor and your family about your charitable goals. As Nebraskans, we hold things tight to the vest, but it's really important to have these conversations out loud. Surprises help no one. And also having these conversations with your advisors and your family can really help avoid any mistakes or a lack of clarity. We want to make sure that your plan actually accomplishes what you intend for it to do. And then finally, if you are interested in leaving a future gift in your will or trust to the University of Nebraska Foundation, we are here. Please feel free to reach out to your foundation contact for a confidential conversation. If you don't have a contact, you will receive our information both on a couple slides from now and in the follow-up emails that you'll receive. All right. We are happy to answer some questions. I'm going to invite the whole College of Business team and Kathy back on. And we'll see what other questions pop up.
Emily, I think you kind of answered this with the very last thing you said on the last slide. But if I were to make changes to my will, what do I need to do? Who do I need to communicate with?
Oh, that's a great question. Okay, so if you make changes to your will and it changes the outcome for someone who's receiving an inheritance or a charitable gift, you want to make sure to connect with someone at that organization, at the foundation, your foundation contact, and just make sure you share with them what the changes are. Again, we don't want to know the entirety of your estate plan. We don't want to count our chickens before they hatch. What we want to do is make sure we understand the impact you want to make and that we have it documented as clearly as possible. So if you make changes to your will, please do reach out to us, whether that's a contact or just our general number, and we'll help make sure that your records get updated. Any other questions? Throw them in the chat. If we haven't talked about them, if you have something that's more complex or more personal and you're comfortable sharing, go ahead and throw it in the chat. If you have a general question or any other comments, would love to welcome those as well. While we wait, or if there are none, I'm going to invite Kathy to share a little bit about what you're excited about at the College of Business right now.
Sure, I'd love to. I always love to talk about the college.
Yes.
You know, we've talked a lot this year about the fact that we welcomed our largest ever incoming freshman class with 975 first-time freshmen. And this spring, we are graduating our largest ever class, which in terms of a specific semester. And I know Mackenzie asked me this earlier, and I think it's around 675-ish. And we have over almost 640 that are actually walking in the ceremony. And that's Saturday morning at 9 a.m. in Pinnacle Bank Arena. So we're very excited about that. And as you might guess, there's lots of events that are happening this time of year. This week is finals week. Just a very exciting time on campus. One of the things that I also shared recently is we've had a lot of student competition success. So our Husker Venture Fund team is a student organization that does early stage startup investments. They have philanthropic support that provides them with a fund that they are able to deploy in early stage startup investments, and they make 5 $25,000 investments a year or up to 5. But then they also participate in regional and national or international competitions. And this year they won the regionals, which gets them into the international competition, the VCIC, which is the Venture Capital Investment Competition, and Nebraska won. And that was quite exciting. They beat Berkeley and Miami of Ohio. Miami of Ohio has a 3 credit hour class that students take that prepare them for the competition. And our students teach themselves, which is pretty impressive that they're that good at this process of listening to founder pitches, making investments, doing deal sheets. So it's really hands-on learning experiences. And then we had 3 Honors Academy different groups of students that competed in various competitions across the country, and they won multiple competitions. And so that was exciting to see as well. So I think I see a few questions coming in potentially, so I'll be quiet, but there's a lot of exciting things happening here in the College of Business. And the case competitions, for example, are things that the only reason our students get to do that is because of the philanthropic support. That's what supports the travel to the competitions. The Husker Venture Fund has, like I said, a philanthropic fund that they're actually deploying in these early stage startups. So a lot of the philanthropy is what gives our students those extra experiences that really set them apart in the workplace when they go out on the job market.
Absolutely. Thank you so much for sharing. I like to think about philanthropy as the margin of excellence, and we see a lot of that at the University of Nebraska. The question Matt shared that we got was, what is a beneficiary designation? Great question. Makes sense that we didn't quite cover it in this presentation because we were mostly talking about wills and trusts. And a beneficiary designation is on any form of an asset that you have, like a retirement plan or a life insurance policy. You have the form that allows you to list what should happen to the funds that are left at the end of your life. And so, in that place, if you think of your family members, you often include your spouse's name and their social security number, and that's where it'll go, or your kids' names and their social security number. You also do have the opportunity to leave a beneficiary designation, whether it's a specific dollar amount or more often a percentage or a secondary beneficiary or contingent beneficiary in those forms. You can do that to a nonprofit. And in that case, the information you would need is the nonprofit's legal name and tax ID number. Very limited space on those beneficiary designation lines to leave any details of your gift. So, for example, if I was doing something to the Emily Solsley Fund, on my form, I would probably list the University of Nebraska Foundation, and then I do documentation with the foundation to share more details about what I'd like that gift to do. So hopefully that answers the question, and if not, please let me know and I can provide more detail as well. Usually you access those forms in the online portal of your Fidelity or TIA or whatever account you're working with. All right, well, moving on here, I just want to share that your legacy lives here. I love this photo. This is a group of College of Business students right there in the atrium at Hawks Hall. And I see the bright future of these individual students of the College of Business of Nebraska. And this could not be done without the support of people like you. So thank you all for everything you do for the College of Business. And I'm going to pop up our contact info here. So feel free to screenshot or grab that. You'll also get this in the email. And then in the chat, I'm going to share the link to the survey that Corey referenced earlier. We'd love your honest feedback. Want to know what resources will be most helpful for you moving forward. You'll also get that in the email. We'll hang on for a few more minutes just in case there's questions, but I want to thank you so much for joining us today for this Let's Talk Legacy Understanding Wills and Trusts. And of course, again, thank you so much.